Good afternoon.
Welcome.
There was a lot of frazzling,
There was.
a lot of like,
Right before this.
just a tree now,
I'm
right?
just moving it.
Anyway, it's Friday, and I gotta lower this, make sure I don't. You know how sometimes I usually put this on, and like, is it so
blast.
loud?
Yeah.
And it's on delay.
It'll say something. Yeah.
And it's on delay. But anyway, guys, it is Friday. It's today's Friday the 9th.
Yeah.
I think next month is Friday the 13th.
You think? June?
Yeah, so you get ready. I think this year Friday, June. I believe so.
Oh my
Anybody want to
goodness.
correct me? But anyway, we're here. We're going to be talking stats because we have a busy week, and I hate like watching myself anyway.
Yeah.
So I could actually see from here. This is perfect
Yeah, I
today.
wanna see what-
But anyway, it was a kind of like we were a little harried today, just moving around some stuff. It just like last minute craziness before the weekend.
Yes. You know how it is.
Carrie's still in the makeup room doing her hair.
I'm gonna set this tree I keep bumping into.
But
Friday.
I'm gonna do
Okay.
perfect.
That's
so now
good.
it could hit me.
Yeah. Thank you.
Anyway, it is Friday evening, guys, and we're going to be talking stats, like I just said, and what's going on at Staten Island. It's an interesting time. Goodness. I think we're going to get a couple of surprises here in the next couple of months. And I think this is going to be a little bit, I think there's no real surprises yet, but I think that may be starting to change a little bit. We've definitely seen some activity, definitely has been a little bit less than I would like to see for May. But that's in light of everything that's kind of happened. So Wall Street kind of took a tanking. It kind of tanked a couple of weeks ago. People got a little bit frazzled, a little scared. What does that mean, though, for the real estate market as a whole? I'm a big chart reader. Everything looks like it's okay so far. But there are some winds blowing around, a little headwind. But let's get into the numbers and let's see what we have, at least for this past month. It's really pretty uneventful in terms of like what we've seen so far. But there are some standout things. So you want to get into it, Carrie?
Yeah, let's get into it. So the average days on the market have dropped down to 74 days. Year over year, it has decreased almost 14%, and month over month, it has decreased almost 10%.
Yeah, the days on the market has decreased, and I'm going to take caution in this because I don't think this is going to continue at this clip. So basically, 74 days down from 86 last year at this time. Rates were probably a little bit. This time of year was up a little bit in May. They were down quite a bit in March and May. They popped up last year at this time. Kind of same thing happened here where we're in similar territory, although it is down month over month. And I think that's reflective. There was a period of time where interest rates kind of fell. And this report precludes what's happened kind of after that little bump in the stock market and a lot of uncertainty kind of developed. So I'm going to take a little caution and say, while these numbers look good, I would take caution in what's going on right now. But I would say it's still on an upward trajectory based on the prior 3 months. So looks okay there. And like I said, 13% decline month over month. The buyers came out in mass right after the holidays. There was no slowdown whatsoever. So everything from that end up until this point.
Sorry.
Did you eat Mexican jumping beans? When you like a hop.
I know.
Anyway, did anyone say anything? Yeah, no. Okay. So what we're going to talk about is basically a healthy start to the new year so far. But I do think that's going to change. Sorry, I don't think next month's numbers you're going to start seeing it because I could tell you just from conversations and we just have a barometer. Uh, there's some caution out there based on what happened with the stock market. Not, but I don't think buyers should be at all at ease because we talked about the Bitcoin index the other day.
Mm-hmm.
Bitcoin back over 100,000 again. It was 104 yesterday. I think it's 102, 103 today. And I hate to tell you guys, that's a good benchmark for where things are heading. I said it's one of the best benchmarks. We did this. We did some analytical data that suggests that Bitcoin has a correlation with real estate prices. Also has a correlation with inflation, to be honest with you. So it's when that seems to move up, so does the real estate market. So consumer confidence is probably on the upswing. I'm going to tell you that's if you're on the fence about buying, that is one of the best leading indicators I've seen. And we did some artificial intelligence on this. It's actually been a good precursor for like markets in general. Obviously, if it holds here, but being over 100K again says that things probably on the right track right now. So I think this will have a little bit of a little shaky next couple of months because the data is still kind of fresh from that little market hiccup, but it looks like it's on the upswing again. And I would expect prices for the houses to go along with the price of every asset class. And that's one of the fastest asset classes. And that's why we talked about it. It's one of the fastest asset classes to move as a precursor to market movements. They've predicted Bitcoin kind of falls ahead and behind, ahead of the market on all fronts. So usually when this swings up, prices of everything else kind of swing up with it. I don't know if that's a good thing for everybody, but it's still what it is. So that's what I have for that. Next thing, sorry.
The month's inventory.
Yes.
So month's inventory has decreased year over year 19% and month over month almost 20%.
So yeah, the month over month is
it's increased month over month.
Month over month is a seasonal number. I don't really take much year over year difference is where I see it. So the year over year difference is that month's inventory has declined again. Most of the indicators here have the market in a pretty good upswing. This is most of the numbers we're reading right now are a little bit they're a little bit past tense. So I think the next 3 months we're going to see some changes to that. But again, I just keep emphasizing that because I think people can get spoiled by these numbers and say everything's on the upswing. But of course, the year over year difference being 19% different, month's inventories means that it's the inventory is tight, guys. I can't tell you this enough. I've said it before. If you like a house, chances are somebody else does too, and that's just the way it's been. You have to make a pretty conscious choice pretty quickly in this market before you could actually moved on to the next thing you may like. And I've spoken to buyers about this several times. And most people will go and see a house that they like and find out very quickly that the house is gone once they actually find it. The right priced house is going with multiple offers. But I do see pricing now becoming a bigger factor in even getting showings more than I've seen in the last 2 years. So pricing is starting to really take hold now. If you're out of alignment with your pricing, the pool of buyers right now isn't huge. So you got to be cautious so far. I mean, that's the way I see it right now. But you have low inventory. It just keeps decreasing. Nothing in this report, I'm going to tell you, it's not too eventful. Everything's still showing pretty good strength. So what's up with the next one?
The sale to list price ratio, they both have increased. So year over year has increased 0.72%. Month over month, it has increased 62%.
Yeah,
0.62.
yeah, that's a little less than 1%. Month over month is definitely noticeable. So people have jumped off the fence and they've jumped off, So the year over year difference in Seattle list price ratio is up almost 7/10%, 0.6% on the month to month, representing almost 85% of that. So the month over month difference is probably the profound difference here, which shows it's a very healthy. So 98% of list price. So you're getting about a 1.9% discount on the price. When you go to make bids, it's important to know this number. This number should be a baseline for where offers are likely to be accepted. Doing this for 20 years, I've seen it. I think there is a question here. Oh God. Oh, that's well, I can't comment on that. That's a political comment. But the big thing is that we're definitely seeing some strength. Sorry, the Facebook people. We're on a couple of platforms at the same time,
Yeah.
and we got a TikTok comment. But the big thing is sale to list price ratio still continues to be strong. I mean, it was down quite a bit. 97.4 was on the lower end. We saw this in New Jersey last month too. But take caution in this. I have some predictions for the next couple of months. But go ahead, go on with the next thing. Why don't we go right to the sold average listing instead of doing all the
sold average listing.
Mm-hmm.
That has increased year over year almost 12%, and it has increased month over month 8.44%.
So $837,000 was the average sold average listing price. Mm-hmm. That's a real big jump, and that's why I made you skip over it, because it was the one blaring thing that stuck out in this report.
Yeah.
Was 11% year over year difference in the sold average listing price. So that means people are really going for high end houses, and at least in this report, the month over month difference was 8%. So that could be representative of a couple of big sales. Averages tend to skew, but this is what the houses that were on the market were priced at when they did sell. So we're talking an 11% difference year over year. That's like pretty substantial, and that's why I want to make a note of it, because I said let's go skip over some of the other mundane stuff and get right to the meat and potatoes. Yeah, so 11% month over month is nuts. I mean, that's up.
That is. No,
year over year. 8% is even 8% of it just in that month. So everybody went. They must have got a lot of big Christmas bonuses because it definitely 8% is just on a month over month. Wow, that's pretty. That's pretty nuts. And I think as it reflected in the sold median sale price is still, geez, it is wildly amazing. Right? Even that like you just go across the board.
Yeah.
Right? I mean, everything was up substantially just in the year over year difference.
Yeah, sold medium sale.
Yeah. Let's go to sold average sale. Sold median sales. Just go skip right to that.
So the sold average sales increased year over year 10% and month over month 5%.
Month over month. So just so you know, this is last month's report. So that's from February to March.
No.
I mean, excuse me, from
April.
No,
it's from March.
From March to April. Sorry, my mistake there. So the big thing is, and I'm sorry for looking down a lot, because these numbers are they're fascinating to me. And I like to do this ad lib, so when you throw the sheets of paper at me, I could interpret it right for you right in the moment. That's how long I've been doing this. We've been doing these reports. I think this is 14 years of these reports like this. So I kind of get a good bead on what's going on. But This is probably one of the biggest jumps that I've seen in a while. Staten Island, it just continues to see its acceleration. This is probably one of the biggest leaps in the sold median in about 2 years. I don't think I've seen it jump this high. From the average being, what was it, 685, 680, the sold median sale price was 665 last year. It's 735 now.
Sold medium?
Yeah.
Yeah, 665.
I'm
Last
making sure
year.
my glasses, your glasses are better than mine. But the big thing is that that is a pretty, and 5% of that happening in a month over month. So 5% of that total basically happened over a span of 1 month. And I'm trying to think, I believe interest rates, this has been such an interest rate driven market that it looks like, I mean, from this report, there is no real stopping prices at this point. But I'm going to tell you, I think you're going to see that kind of fade away in the next couple of reports. I do think that we're going to see. I just know I have good sense of where the markets are going, and I like to go onto Wall Street and say, "Hey, Wall Street, when you get these corrections, everybody it kind of rattles through the economy. It just takes a little time. Real estate's the slowest mover of all the indicators, so usually it'll ring through later on. But you're going to be on the upswing, and I told you why you're going to be on the upswing because we did. I'm going to stick by my Bitcoin metric. Mm-hmm. You're going to have a very good. Looks like going into summer. The summer is going to see an ascent, just based on the fact that that's a very good leading indicator. It showed the markets going down way before. It shows them going up way before. So before all the markets tend to follow that. It's the most volatile asset and the most. So I'm going to tell you, if that's the case now, with that being over 104, we never really benchmark these things on asset classes, but real estate follows it, and I'm going to say it's following this for sure. This is 10% median, so 10% gain year over year in the average sold median sale price for the month of April. Mm-hmm. You don't have May's data, and we'll get that next month, but it's wild.
Yeah.
So what do you have for active listings? This is really interesting too.
The active listings have decreased year over year, almost 14%, but have increased month over month for 4%.
The month over month is seasonal, and that's a very low seasonal number, to be honest with you. So it only increased by 4%. It's down 13% from a year ago. So active listings continue there at 1209. Now 1209 probably represents, I wouldn't say there was more than about 900 real true active houses on the market on Staten Island. Our MLS incorporates some other borough and even New Jersey now data. So I think we're falling into it's just a very tight inventory situation. Continues to be. So so if you're really not getting your house sold, you're probably considerably over where you should be in Staten Island anyway. I think because with these numbers being as low as they are, you have a very good shot at making still very good numbers if your house is on the market right now. Just based on this data, like I said, it looks healthy. 13% decrease year over year. And that reflects in the average days on the market being lower. The month's inventory has been lower. Month's inventory is absorption rate, how quickly houses stay on the market and move off the market. So it's like if we froze the market today, and I repeat myself on this because somebody asked me what does month's inventory mean? Today's inventory, if it took based on the volume of sales, how long it would clear it off the shelf. So that's down to 4.44%. So, and active listings are down 13%. So yeah, not. But there are some interesting stats here that I gotta really point out later on. So you can go to the next one, the new listings.
New listings have decreased year over year, almost 5%, but have increased month over month, 5%.
Yeah, so yeah, almost 6% year over
Mm.
year, right? So or 5.5. So basically, new listings, people are not putting the house on the market. I mean, that's really, again, adding to the. There's not, and that's why people say, "Oh, is there a market correction in the fold?" The new construction that we talk about now is so limited that it's very hard to really say that inventory is going to change much. You don't have sellers putting their houses on the market. I mean, that's really clear here. I do think it's it's definitely a very good time because I think there's some parts, like especially if you're moving to different parts of the country. Everybody's watched what's going on in other parts of the country. South Carolina, North Carolina, Florida have seen their markets go in the other direction. And if you're moving into those markets based on what's happening here, you're definitely getting a better deal now than at probably any point in the last 3 years. So if you're going to those markets, especially in new construction, one of the latest figures that came out on I believe it was CNBC
Mm.
that said new home construction prices were lower than existing home
Mm.
prices as a start. That's specifically true if you're going down south. So builders are willing to really part way this, and this is the first time this has kind of ever happened. It's very rare to. I don't think it's ever happened before, where builders are just there. And I do think it's because of the volume of sales. Builders are forced to cut their prices more or get the inventory moved more. There's just not that many buyers out there, even though it's like a healthy market in terms of like price, volumes are not there. So if you're in the construction business and you're not moving inventory quickly, you're losing money quickly. So they're more inclined to cut and slash prices even more so than existing home sellers because there's a profit margin that needs to be met on these properties when they're being constructed. So they need to turn them over quickly. This market is not a high volume market. So that's why you have prices of new construction dropping below that of existing homes. And that's in the South, that's what's happening. So if you're moving down there, it is you're really seeing you're seeing some discounts that you probably haven't seen in the last 2 years. So Florida,
Mm.
parts of Florida, definitely. I'm not going to get into which parts because I'm not an expert, but along the West Coast, it's a little more challenging than the East Coast. Um, Central Florida is a little rough. That's because of Airbnbs. That's a long story. Uh,
Mm.
then you have the Carolinas, which a lot of new construction is taking place in. So those two markets have a lot more inventory than they've had in years. So you can make a deal there. And if you're moving into those places, this is the time to do it. You're going to max value here, and you're going to go into a market that's definitely on the upswing. On the downswing. Um, the so let's go to the final piece, and then I'll sum this up.
Mhm. The pending listings. Pending listings have increased year over year 17%, almost 18, and month over month increased 14%.
So 374 houses are pending currently, based on this latest report. So represents month over month. Year over year difference is quite significant at 20%, which is what I like to pay attention to more. Month over month is seasonal. I do expect that would be increasing for April anyhow. So there's nothing to report there. But 17% year over year on pending listings is just indicative of what we said so far. The prices have consistently been squeezed to the upside because inventory levels still are not in, and a lot of places are like this. Not everywhere, guys. So people are watching in different parts like this. Say, "Oh well, I don't see much activity here, or there's price cut." We haven't gotten into New Jersey yet, but there are some towns in New Jersey that are definitely not doing as good as other parts of New Jersey, and there's varying reasons for that. But as a general rule of thumb here locally in the New York market, specifically Staten Island, 17% year over year difference means it's pretty healthy.
Mm-hmm.
Sold listings as well, right? It's just
Yeah, sold listings increased year over year, almost 7%, and month over month decreased almost 13%.
so sold listings decreased month over month. That's a weird. That usually doesn't happen, but uh, so 272 sales in April. That is not great at all. So when you talk about sold, total sold homes, meaning not talking about prices here, we talk about volume of sales. Being sub 300 is not great. I'm going to tell you, and why I say it's important is you have to look at it historically, where like in healthier markets, like in 2021, 2022, this was going at about closer to 400 and change, and now we're down to 272. Not great. Better than it was the year before, but again, when you're in this 300 range, you're not seeing a healthy amount of buyer activity as a general rule of thumb. Because, like I said, being in this market, you'd like to see at least 350. And a lot of it has to do with inventory constraints um, and sellable listings, because there's a sellable inventory and there's a non-sellable inventory. So of the houses, when I mean non-sellable, meaning that some people will put their house up at a ridiculous amount of money with the hopes that you know they're going to get that person to jump off the fence and say they're going to bid it way up there. Uh, and sometimes it's way off the mark, and then so that could represent almost 20% of the market, believe it or not. So so when you talk about inventory constraints, the sellable, meaning the houses that are priced correctly, that's why you see multiple offer situations on houses that are priced appropriately for the market, and you see none if you are overpriced, because the volume we just spoke about here is not fantastic at all. So you're going to see this kind of drop down to levels that uh, if you were to have any type of inventory spike, this is not something I'd be too excited about. But volumes are definitely down month over month, which is unusual. That's an unusual stat. Anomaly, we'll see. Year over year difference, it is up though. Last year was, I mean, 2023, 2024 were pretty bad in terms of numbers. So when you see a 272, though, you want to take caution, saying that if there is any inventory spike whatsoever, like inventory or things slow down, this number is not really that great to sustain the market pricing that we've seen in this report. So it's something to be cautious about, because I do think that the market's um, more subjected to like a shock of some sort could change trajectory quite rapidly. So it can change quickly just because the volumes aren't great. And that's true for anything, any market. When volumes aren't great, there tends to be higher volatility, meaning prices can shift quite dramatically in the other direction. Volume really does support price. This is why I've kind of had this weird caution about real estate, because with volumes being this low, it doesn't take much of a shock to inventory to really change its trajectory in terms of pricing. And it's so important to understand that when we look at these markets and people understand what they're seeing and try to make sense of what they're seeing, we always want all the factors, pricing being the last factor, to be honest with you. The one of the factors I always pay attention to is volumes. When I see volumes, non-healthy volumes or non-healthy volume rise in terms of turnover in housing, these type of numbers are not great. And again, it's more subject to volatility when you don't have You don't have the kind of marketplace that has a lot of activity in it. So things could change quickly. And I think that's one of the things we do need to pay attention to in the next few months, because I do think that there was a little bit of shock to the system. People kind of felt like when the stock market dropped, I think people kind of felt a little scared and panicked. And I think that's really where, um, like, you're going to see a little tail off in some of the activity numbers. I don't know if pricing is actually going to change. Sellers are really kind of like stuck in. They're kind of hanging in. Um, Even if they are priced over, they have been reducing some, but they're still within the upper ranges of the price brackets that their houses are in. So, like I said, we have to pay attention to that. And I think that's what we're going to see in the next couple of reports. There's going to be some. There's definitely going to you're going to see, just doing this as long as I have. I've been doing these reports. There are things that you could see in the economy that kind of like scare people into like pausing, uh, and they become painfully obvious after reading numbers for this long. Just getting a sense of just chatter, a news cycle, specifically the little Wall Street bump, because we've had people who are on the fence speak about it when they were in contract or they were putting in an offer. They're like, oh, maybe we should kind of pause to see what happens with the stock market. Mm, they haven't really correlated well, and that's one of the strangest things about this market moving forward. So be cautious, um, because I do think that while everything looks rosy in this report, the next few are going to probably come in a little bit below what I see in these reports. So I wouldn't expect any great rises. And when we do New Jersey next week, I think you're going to see some tail off in some places, just based on our latest analytics. And I did some analytics on the Jersey market to see what the heck is going on over there. Mm-hmm. But let me just see. Somebody said, oh, no, I don't want to read that. So that's pretty much what we have. Hopefully you enjoyed Cinco de Mayo.
I did. It was fun.
Where'd you go?
Alfonso's Cantina. It's in the plaza with Intox, Oakwood.
Okay.
Yeah, it's very good.
Not like Andrews. No, like I wonder if it's no, it can't be. Anyway. So anyway, I didn't do much of anything. So
no.
I had to drink my coffee with a little,
on the rocks. Yeah.
Coffee on the rocks. Yes, that's it. Spiked punch. Anyway, that's what we have for you guys. Hopefully you guys tune in next week for the full New Jersey report. And if you have a question, drop a link. Where should they go if they want to see our other stuff?
So you could go to YouTube, Facebook, Instagram, TikTok, Nextdoor, LinkedIn, Pinterest.
Yes.
Is that everything?
That's pretty much everything. You probably missed a few, but we made some important benchmarks. We definitely hit 1 million people on YouTube this month.
Yeah.
We hit almost 250,000 on Facebook. On the one page, we were on 2 Facebook pages. If you don't know, so it's just definitely. And you can always see Carrie. Carrie like dominates the search engines now.
Yeah.
You can see Carrie's stat reports.
Yeah.
She's getting antsy. It's almost 5 o'clock. I can see it on the screen, and you see that? That's the itch.
I'm antsy today. I am.
Yes,
sorry.
I'm gonna pin you to the chair.
I know. I think I need to be.
Anyway, that's what we have for tonight. Hopefully, if you have any questions, please feel free to drop us a comment, like, subscribe, share, and we'll hopefully see you in a week from today.
Yes.
All right.
Bye,
Ciao.
guys.